Hello, everybody. Thanks for joining. I'm Kevin McParland. I'm the head of research for the market structure and technology team here at Coalition Greenwich. We're really excited for the conversation today. So many good things to talk about. We're going to jump right in. Just a couple of quick admin points before we get going. So first, questions are welcome. Please just type them in the question box. We'll do our best to sneak some of them in the little bit of time that we have. If we don't, we will try to follow up after the fact. After the event, we will ask you to participate in a very brief survey. We do look at the results, so please just take the 2 minutes to tell us what you thought and what you'd like to hear next time. And then lastly, we are recording the event, so we will post that and distribute that to everybody registered after the fact, probably in a couple of days after we've had time to load it and do a quick write-up, so keep an eye out for that as well. And so with that, we have a really fascinating discussion today. Two of my favorite things, right? We have a great sort of coming together of fintech and bond markets and sort of innovation in the space. I'm excited to have David Nicol and Michelle Neal, both sort of running and starting LedgerEdge. So with that, yeah, let's get to it. So Dave, maybe we start with you and then over to Michelle. If you could just introduce yourself, maybe a little bit of your background, sort of how you got there, and then tell us what it's been like launching a company into this super competitive market.
Well, thank you very much, Kevin, for having us, and thanks to everyone who's listening in and watching in. Kevin, I thought you were going to say that these are two of your favorite people, but we'll work on it. We'll get there.
I mean, by the time we're done, I'm sure that'll be true, yes.
As a brief introduction, my name is David Nicol, and I'm the CEO and co-founder of LedgerEdge. And LedgerEdge is a new corporate bond trading platform. We use distributed ledger technology to give users ownership and control of their data, trade on a point-to-point basis, and achieve fundamentally better execution. This has been an idea in the works for years. My entire career has been about bringing technology into financial markets and domains where it's making a real difference for customers and delivering a real outcome for real users. We looked at the bond market with David Rutter over the course of 2019 and 2020, and we found that there was a real opportunity to improve the way that bonds are traded today. We think the market's come a long, long way, and I know we'll get into it, but we think there's a lot of new innovation and a lot of great experience to deliver. Last year, we started with working groups with 18 sell-side firms and 21 buy-side firms, to make sure that we were addressing a real pain point in the market, and also to work with our customers to kind of hone our value proposition. And I have to say that then, as we started building into this year, into 2021, we have the very best customers in the market, and I know many of them are on the line here. They're truly wonderful. We've been building, as I say, our platform from the beginning of this year, 2021. And in July, we were really happy to welcome Michelle Neal to the team as CEO of LedgerEdge US. So with that, Michelle, I'll hand it over to you.
Yeah, thanks very much, and thanks for having us on today, Kevin. Yes, I've really excited to be at LedgerEdge. Maybe I'll just give you a little bit of background on myself for someone who doesn't know me, and then talk a little bit about our upcoming plans. I started my career in Boston, where I am today, in investment management software. Those were the early days of large real money clients adopting order management platforms to implement portfolio management, pre and post trade compliance, and centralized trading. Those platforms went on to start offering electronic trading connectivity, mostly for equities products at that time, via FIX. And that was initially how I transferred to the sell side. I spent 18 years in the UK working for RBS, Nomura, Deutsche Bank, and very much focused on electronic markets and market structure businesses. And as that kind of went through the crisis, that kind of moved from being really about electronic trading in the front office to also post-trade services and kind of the whole front to back. And over time, I was lucky to take on greater responsibility for sales and trading businesses, but really always kept very close to what was sort of my origins and what's been dear to me, and the electronics trading space and market structure evolution and commercializing businesses around regulation. And ultimately, that's led me to LedgerEdge because I really wanted to ultimately come back to a product company, and so it was really an excellent fit. I started in the summer. I started ramping up, getting to know the team, and seeing familiar clients, which was obviously really at the time when people started getting out again and seeing people in person. I then hit the ground running more full time in September. And it's just been really great, and I'm so glad to be here. But I am primarily focused on setting up our U.S. corporate and regulatory framework. I'm pitching in, obviously, as part of our management team wherever I can to help our company and business mature. And in terms of our launch plans over the coming year, we are focused on launching a UK MTF imminently. And a US ATS in the construct of a broker-dealer here in the US in March of 22. And we're also focused on our European MTF, which will be a later launch later in 2022. So we're focused on being an institutional-grade regulated ecosystem for trading. And that is our current arrangements. As David mentioned, we worked with a lot of buy-side and sell-side firms to home the product. We're doing the same thing here in the U.S., and I'll talk a little bit about that later. But we're taking a similar approach.
Great. Yeah. So, I mean, this market obviously has come a long, long way in the last decade, let alone in the last year and a half. So certainly a fascinating space. Although, to be fair, right, competitive, right? There's a lot of focus here, a lot of growth, a lot of good people that are sort of innovating. Can you maybe tell us a little bit about sort of, you said you've had those workshops with your customers. What have you learned about trading protocols and what people like and what they want and maybe what they don't feel like they have today that you're hoping you can provide them?
Yeah, absolutely. When we spoke to customers and when we looked at this market, it's clear that the market has certainly come a long way, and we see a lot of other digital ecosystems in the corporate bond market, who have kind of brought the market into this digital age, and they've done tremendously well to do that. When we spend time with customers, we observe the following, and I think Kevin, a lot of this resonates with the research that you guys at Coalition Greenwich have done really, really well, which is that for large trades or trades in particularly illiquid names, kind of anything above 2 million in size, or outside of the top 2,000 most quoted securities, it still can be quite a challenge to find liquidity and get the trade done in both an efficient and an effective manner. It's still largely a market with lots of different liquidity pools. And the challenge that we heard from traders was that you have to find the right pool to get a particular order done. And so much of deciding how to go into the market is really down to the skill and the experience of human traders at these wonderful customers, these market participants. And it's a real challenge. We heard that if you put your order into certain venues, then there's lots of data leakage, and maybe that's okay for certain types of trades. But for those larger in size trades, complex trades, illiquid orders, you want to be very careful about what's out there in the market. You want to limit data leakage as much as possible. And ideally, you'd like to find the right pocket of liquidity to deploy that order before you even hit the market. We also heard that the interaction between the trader and the and the portfolio manager, or the sell side analyst on the sell side, kind of the whole ecosystem around the trading desk is improving every day, but there's much greater demand on that communication between those parties, and the ability to communicate accurate liquidity information even before the trade is even put into the market. And so we think that's a big need as well. I would finally say that we started all of this by talking to the sell side, because we fundamentally believe that this is a multi-sided market and all sides are very important, but the sell side is a critical part of market structure now and going forward into the future. We see that the sell side often talks about how much data they put into the market today, and then they have to pay for that data to come back in the form of data products or data feeds. And we see a divergence between customer value and kind of the customer service in that relationship. And so the market's kind of crying out for a system that can support a more intelligent order, that can limit data leakage, and a data ownership model that really puts control back in the hands of those who kind of contribute and create the most value in the ecosystem.
Sure. Yeah, it comes up time and time again. Still, the most valuable data set for investors in corporate bonds are dealer-provided prices, right? So making better use of that on the buy side, but also helping the sell side to distribute those in an effective way. Yeah, I can see as a really important focus. And Michelle, obviously, you came from the sell side. You have that sort of recent perspective as well. What do you feel like is still wrong with the market, which maybe that's too strong a word, but what is still wrong with the market that needs to be fixed that sort of goes into the solutions you're building?
Yeah, I mean, I guess really picking up from what David said, and obviously having sat in the seat and managed my, both my data costs, but also the consideration on how to evolve our business with more intelligence. I think banks and clients alike sort of despair at some of the models that are out there today. Data it's critical from driving everything that banks and clients do. Whether it's managing risk, supporting regulatory models, or doing more exciting things. Getting sharper, faster pricing to clients, more sophisticated models, making efficient use of financial resources, all of those kind of things. It's a tremendous burden on firms, both in terms of the economic models around data and also in terms of the access models as well. And so, one of the personal things that really resonated for me in my discussions with LedgerEdge was that they really wanted to take a fundamental different approach to that. And that was just really marrying up with what we've been hearing from clients, from inception, but also in my own short time here at the firm. So I feel very good that that we are taking a much more sensitive approach to how we're dealing with that. And I think that there's two sides to it. One, we're obviously giving clients the ability to access new data sets, both in terms of what they bring into the system, but how they can actually use them in their workflows. But then that they can actually feel safe that that data is not going to be turned around and aggregated and sold back to them in the market and the product, which actually could, erode some of it, what it is that we're actually trying to do. So I think that is definitely resonating with clients. And I think the other thing that's resonating is, obviously, clearly, for a multitude of reasons, multi-dealer, multi-participant protocols are appropriate for certain types of trading. But the other thing that's appropriate for other types of trading is actually direct point-to-point connectivity between dealers and clients, and clients on different sides of trades. And so, being able to support this point-to-point, node-to-node communication protocol, I think also enhances our clients' brand value to each other in terms of getting some of these more sensitive trades done. And so that's not an easy thing to accomplish. You do need a platform to be able to do that, and to be able to do that in a scalable way. I think clients and dealers alike are finding it challenging to manage the infrastructure configuration, testing, and maintenance of those direct connections. And I think we can offer, both that multi-dealer, but also sort of point-to-point experience, which I think is very valuable, particularly for some of the sort of trade workflows that we're focused on.
For sure, and that came up so we did a recent research where we talked to the sell side about a variety of things, but where they thought the platform should invest, where they thought they themselves as dealers should invest. Direct client connectivity was number one on the list. So certainly a focus there for sure. I'm going to come back to the data point in a minute, but first you talked about how you're launching in the U.S. and you're launching in Europe. I think most of the audience probably knows the basic difference is obviously the U.S. corporate bond market is bigger, although the European market historically has actually been more electronic. But can you tell us sort of from a product perspective, what are the differences between the markets that you're keeping in mind as you're sort of building out the offering?
Yeah, do you want to start that, Michelle?
Yeah, I'll pick up on that, briefly. I mean, having spent, the best part of 18 years in the UK and Europe, these markets, those markets in particular, have always been, I would say, leading in terms of adopting electronic trading, pretty much across all asset classes, maybe with a few exceptions. But as you pointed out, Kevin, the U.S. market is larger. It is historically also more relationship-based, although COVID, and I think the transition to work from home as a crisis, if you will, actually saw more people gravitate towards electronic trading than away from it, like we've seen in other crises. And so I think that hybrid working, future of work has changed some of those dynamics. I think generally speaking, there continues to be other drivers for the increase in appetite from electronic trading, from everything from efficiencies through basically use of digital capabilities that just aren't available in a voice paradigm. And so, although our initial launch is UK focused, we will be working with a group of US key stakeholders such that, as David described, to ensure that these regional nuances, whether it be spread trading, spotting, or other workflow specifics are catered for the US market. And that we also thoughtfully implement some of the more fundamental market structure functional capabilities, whether that's ETF workflows, the process around create, redeem, and some of the aspects around accessing liquidity to support those workflows, as well as other U.S. domestic-based products. I mean, we're very focused on making sure that we don't just impose a UK system on the US market, but we make the appropriate changes, very similar to the paradigm that it doesn't always work when you impose an equity-based system on a fixed income market, like similar type considerations.
Yeah, there are lots of parallels, and I would add that we started in the UK here in London because of a confluence of people and customers in a really, really innovative environment. And I think that we had some great energy, probably despite all of the the separation related to Brexit. We had great energy in our interactions with customers over the last 2 years here in London. We're really excited to expand to other markets. We have, as Michelle mentioned, the US early next year. We have the EU next year as well. And I think we'll certainly focus on making sure we get those right before we look at any other expansion. But no, it's been a wonderful place to start, and I think that there's a lot to build on in the much bigger market of the US.
Great. So let's move on. Let's start to get into the we call it in the title, right? The DLT DeFi part of the conversation, and sort of how that plays into this model and how that plays into how LedgerEdge is different. Obviously, data has gotten better in the space over the last decade for sure. There's no denying that, even though there's obviously still improvements to be made. And most market participants, I think, still use traditional methods of gathering and sharing and parsing and analyzing. So can you talk about how this can be improved? Why DLT? I can write it's on your banner. It's like right in the tagline. Like, what's the role that's playing, and how does that make your offering different from the other sort of platforms that are out there today?
Yeah, of course. I think that as we've looked at the market for years, we are not, of course, the first people to make an improvement in the corporate bond market. But what's different about now, and I don't think that LedgerEdge will be the last kind of innovative approach in this direction. What's different about now is that until now, it hasn't been possible to get everyone in a market looking at the right version of the truth without putting all of the data into a central order book or a central place where data is managed, controlled, and then distributed to the right participants. And in the past, the very best way has been to just put everything into one place and then distribute it to the rest of the market. You've seen some innovations around the way that information is distributed, whether it's like a dark pool or whether there are other rules based on who sees what when. But it's only now, when DLT is actually ready for institutional grade use and a fully regulated market, that we're able to look at fundamentally distributing liquidity in the market so that each user can own and control their data in the form of orders that come into the market. Now that we have this base on which to build, you're able to essentially give everyone a unique picture of the liquidity that they're able to see in the market. And that means that everyone doesn't see the same version of the truth. But what DLT helps us do is make sure that everyone's seeing the right version of the truth based on what they're sharing to whom. And Michelle mentioned direct connections across an ecosystem between counterparties. this in the past has required expensive integrations. It's required connections that have to be built and then maintained at great expense over the course of years. And with this kind of distributed ecosystem, a single counterparty can decide to start a new connection, start a new relationship on a bilateral basis with the click of a button. And so it's a really exciting time to be building technology in this space for that reason.
And is there, I'm going to ask the stock question, which we didn't plan this in advance, but the DLT versus, can't we just use traditional databases that are deployed in multiple locations and set rules and have it operate that way? Why is DLT so much better?
Yeah, as you can imagine, we spent a lot of time thinking about what we would have to do to build this new market approach, and we decided to build this with DLT because it allows us to make that promise to customers that we aren't owning or controlling their data. It allows us to make that promise not just from a business or a legal perspective, but from a real functional perspective. I would also say that it sets up the market for new types of interactions, new types of engagement methods. When you're interacting on a peer-to-peer or bilateral basis, a protocol is simply the combination of messages that goes between those two nodes, between those 2 points in the ecosystem. And it's very, very easy to build new patterns of interaction, whether that's a portfolio trade or whether it's a new type of RFQ or whether it's some other type of interaction with the market. It allows us to be very agile in that way. And so we found it made a lot of sense for us to build it on DLT. I would also add that the smarter you make those orders, I mentioned smart orders earlier in the call. We're building really smart orders into LedgerEdge. The smarter you make those orders, the more intelligence you put into whatever is going into the market, the slower it takes that order to move through a single central system where it has to deal with lots of these kind of heavy orders, so to speak. So the more you can distribute, the more efficient and hey, maybe even the greener it gets.
Yeah, I mean, so is that, when I think about decentralized finance, I think about things like Uniswap, which to me are like light years away from institutional capital markets. So can you bring the DeFi methodology back to the real world of capital markets and what's possible now and what are the opportunities? And is that how you would classify what you're doing?
Yeah, I think in terms of what's real, that there's so much excitement in the DeFi space as a whole, and I think what's different about the space that we're talking to customers about, and that our customers are paying a lot of attention to, is that this is regulated and institutional grade, and that is I think the only way that any of these new and innovative approaches are going to reach their full potential is in working with customers, entering into this in a fully kind of regulated and institutional grade approach. I think there are two other additional opportunities. We've been talking about secondary market trading, and that's I think a clear opportunity, and it's here now. There are two other opportunities that we're paying a lot of attention to. One is, of course, in the primary market and new types of issuance, and the second is in post-trade in the settlement cycle. In the primary market, we see a lot of potential in new smart or digital assets being issued. We saw the EIB issuing a new digital bond over the summer. I think that got a lot of people talking and thinking about the potential of not just improving the workflow process of the primary issuance process, but also the efficiencies that can be gained when you're managing a bond through its life cycle, through coupon payments, through conditional exercising rights, and all the way through maturity on a system that can interact with the market, that can do things automatically. There's a ton of potential there, and for a market like us, we have our smart order, we have our digital order, which can search the market and do all these great things. We're happy for that order to be supporting a digital asset, an existing corporate bond, whatever it is. So that's definitely one opportunity. And then in settlement, this is where we hear a lot of attention now, and there's obviously a spectrum of use cases for stable coins or payment systems that are delivered on distributed ledger technology frameworks. We see a great opportunity in giving our users the ability to choose how, when, and where they want to settle. And I think that there's a lot that goes into post-trade that's much deeper than the surface level. Can I settle faster? There's a lot of cash availability constraints. There's a lot of cash and liquidity challenges that have to be met. You have to work with firms' treasury systems. And so, I think the innovations that central banks are working with customers on, and that these, new settlement venues are starting up are great. It definitely takes a little bit of time, but I'd say we're right on the cusp of a real settlement revolution.
Yeah, no, I agree. We've heard the same, and those things feel very now and very practical areas where the systems, in some cases, there really isn't much technology at all, and where there is, it's sort of starting to get dated. So on that point, if we sort of look forward, obviously you're starting in corporate bonds in the U.S. and Europe. There is a lot of other opportunity, I think, in sort of less liquid parts of the fixed income market. One of our attendees today sort of brought up the fact that sort of Dave Rutter obviously was quite successful in launching a new initiative in the treasury market, for instance. So maybe there's opportunities in government bonds. But what else are you guys thinking sort of as you I know we need to walk before we can run, but what are you thinking as possible ideas for beyond corporate bonds?
I think the themes that we've been discussing, as you just mentioned, they're not exclusive to corporate bonds. They really apply to many harder to trade assets, and we feel that that's kind of our sweet spot out of the gate, just given the nuances around managing the data sets, the security around the interactions. And so I think that you could imagine that natural extension across spread securitized products are a natural fit for us. But that said, we're a client-led platform. We love taking input from the market, from our clients, and so over time we'll shape that accordingly in terms of where we think we can get the best momentum, solve the most important problems. But again, to your point, Kevin, there's no reason why we also can't turn our focus either in whole or in part to products that thrive more on volume and velocity, right? I think naturally speaking, we want to solve problems that haven't been addressed, but there certainly isn't any reason why we couldn't do that, to your point. And so I think all of those things will be opportunities that we look at together with our clients in terms of how we sequence things going forward.
Great, and I know we're running a little short on time. We had another question of people trying to better understand. I think we're getting some echo. You guys can mute for a second. I'll ask the question. So we're getting another question. People really just trying to understand. Obviously, there are some sort of big established incumbents in the space that have good market share. So people in the audience are trying to understand sort of what's different, what's interesting. And maybe an interesting way for me to ask that question is when you are talking to the folks in your roundtables, the folks you already have signed up as clients, and then prospects, what is it that gets people excited? When does the light bulb go off and they say, oh, that's pretty cool. All right, let's talk more.
Yeah, I think there are really four things that the customers and market participants really light up when they think about LedgerEdge. I'd say that the first one is on owning and controlling their data. That's definitely a theme that we're seeing it in other markets. We're seeing it in the equities market. We're seeing it in lots of other applications. That's a theme that's not going away, and that's a real desire from all of our customers. Yes, especially on the big sell-side firms, and especially the very big global asset managers, but everyone is now thinking about their access to data, how they're using data, and that will only increase going forward because data costs are one of the biggest increasing line item on every firm's budget that we speak to. I think the second point that people really like in the market is what Michelle mentioned earlier, which is that direct connection across the market, the ability to form a relationship with someone else on the other side of the market, either anonymously or in a disclosed manner, with any kind of protocol between them, RFQ, streaming quotes, portfolio trade, etc. That ability to connect directly is quite compelling. It's that ability to have that direct connection and another direct connection with zero marginal cost. You can expand that, ramp that up as quickly as you'd like. The third thing is on engagement methods. We've talked about smart orders, and where we're getting a lot of excitement from both the voice trading desks and the algo teams is the ability to do more with less. Everyone's budgets are being constrained. All the desks have to do more with less. And as we've seen since 2008, balance sheet has been constrained on the sell side for over a decade. And so that's not really a trend that we see going away. And so the ability to put a smart order into the market, something that reacts to what else is in the market, something that only reveals itself when the conditions are right, and putting all of that intelligence at the market level, at the exchange level, it allows firms to do a lot more with a lot less, and really kind of turbocharge their electronic trading and algo businesses to deploy their talent and their kind of their edge in the market, so to speak, in a much more intelligent manner. I think the last thing that we haven't spoken about on this talk, and I know it's not the topic of the talk, but in fixed income in general, trade execution costs are a big pain point, and they continue to go only one direction in this market. And I think that frankly we just have an opportunity to start from a different point, and so a very competitive trading execution cost value proposition has been a real selling point.
Awesome. That's great. Well, thanks. That's a perfect way to sum it up. Fascinating work. Like I said, two super interesting spaces that you guys are bringing together. So I'd love to see the innovation in the market. Great. Thanks, Dave. Thanks, Michelle, for taking the time. Hopefully we can do this again, in a year and hear about all the progress you've made. But thanks so much. Thanks, everybody, for listening. If you do have any follow-on questions you think of, you can always feel free to email me. We can get you connected with Dave and Michelle if you don't know how to get to them directly. And we'll be back again in the coming months. So thanks so much for your time, guys.
Great. Thank you very much, Kevin.
All right. Thank you.
Bye-bye.